14 of 21 series are aligned with STAGFLATION mild this morning. That is a moderate but meaningful level of agreement across the framework's macro inputs. The current macro regime is STAGFLATION mild, with a confirmation score of 14 out of 21. In this configuration, the macro regime reflects an environment where growth momentum is decelerating, while inflation momentum is accelerating at the same time. Growth momentum is running at approximately -0.58 on the engine's standardized growth scale, capturing softening labor data and weaker manufacturing activity, including negative manufacturing job growth and degraded ISM-style indicators. Inflation momentum is slightly positive, around +0.01 on the engine's inflation scale, consistent with the recent PCE inflation reading near 4.5%, and renewed energy stress stemming from the re-escalation of conflict in the Middle East. The coherence score sits in a moderate alignment band, and the confirmation score at 14 out of 21 places today's setup in a zone where, by our framework's historical reckoning, regimes with this level of series agreement persisted in roughly 41% of observed cases over rolling 3-month windows, with the most frequently observed next state being an acceleration-type configuration, not as a forecast, but as a mathematical characterization of past behavior. 1. Compared to last week, when confirmation was also centered around this mid-range reading, the broad regime alignment has remained relatively stable, even as the underlying narrative has shifted towards softer growth and more visible inflation pressure. Historically, environments of this type have felt choppy across risk assets, with more dispersion between sectors and uneven performance across duration buckets in fixed income. A description of past patterns, not guidance. On the yield side, the 10-year Treasury profile remains below the 4.45% trigger level that the framework tracks. The engine currently labels the broader rate complex as normal, with move in the mid-60s consistent with subdued realized volatility relative to the past 2 years. In our framework's reading of comparable periods, this roughly coincided with range-bound nominal yields and intermittent but contained rate volatility within the subsequent quarter. An observation under our methodology, not a forecast. Labor conditions form the second signal. Key labor proxies such as non-farm payrolls, PIMs, and initial claims, ICSA, are carrying red momentum labels, reflecting negative shifts in payroll growth and a softening pattern in claims relative to prior months. In our framework's reading of comparable periods, this roughly coincided with more defensive sector leadership and a cooler pace of cyclical hiring within 1 to 2 quarters. Again, an observation under our methodology, not a forward guarantee. Credit is the third signal. Credit markets have been volatile but functional, with spreads contained as equity and portfolio flows rebounded, and investors priced modest additional tightening out the curve. The engine effectively treats the credit complex as neutral to stable, with no extreme momentum label assigned. In our framework's reading of comparable periods, this roughly coincided with moderate spread drift and a tendency for higher quality credit to hold up better over the following quarter. An observation under our methodology, not a forecast. For the fourth signal, we look to equities and sector rotation. Technology has undergone a sharp drawdown, with a broad AI-led rout following news flow around China's DeepSeek and renewed scrutiny on AI-related valuations. In contrast, defensives such as healthcare, utilities, and real estate are showing positive day-on-day performance, while energy is supported by higher underlying geopolitical risk, even as front-month crude is off its recent highs. In our framework's reading of comparable periods, this roughly coincided with more persistent factor and sector dispersion over 1 to 3 month windows as markets digested the combination of higher inflation math and softer growth. An observation under our methodology, not a forecast. Turning to the conditional map, the engine is tracking 2 explicit if-then triggers. If the 10-year yield crosses 4.45% and holds that level for 5 consecutive sessions, in our framework's reading, a clear acceleration in the inflation composite appeared in roughly 9 of 11 comparable conditions, a historical characterization, not a forecast. In the context of the current stagflation mild reading, That kind of move would mathematically shift the inflation side of the regime toward a stronger acceleration profile inside the model. If the fear and greed index drops below 15 and holds there for 5 consecutive sessions, in our framework's reading, deterioration in the overall regime confirmation appeared in roughly 7 of 9 comparable conditions. Again, a historical characterization, not a forecast. 1. Against today's backdrop of fear at roughly the high 20s, such a move would represent a further sentiment washout that, in the sample we studied, coincided with more defensive cross-asset configurations under the engine's methodology. The map is live. These conditions are being monitored daily across all 21 series. Atlas is the automated rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 liquid symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as an upside-aligned or downside-aligned condition under the framework. A reading of how the 4 layers line up, not a trade. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols. The 4 layers do. Members use Atlas to study how the framework has recorded conditions across prior environments, as historical behavior, not as trade selection. Atlas runs the framework. You study the outputs and environment. You decide what to do next. Every reading is framed as may, potential, and educational. Historical structure, not advice. The morning brief is the public surface. The live Atlas dashboard shows the full 21 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.